Yo, what's up guys, welcome to another video. In this video we will be talking about the different market conditions when it comes to trading. First of all, we will be covering the market structure, then we'll be talking about trending markets, consolidating markets, changes in trend, and new trend confirmations. So to start off, the first point, the market structure. So there are three different types of market structure in the markets. The first one being a bullish market structure. So this means that the trend is to the upside. That means that price is moving to the upside. Then we have the bearish market structure. This is to the downside. So that means that on the trend or on the chart, we see that price is going to the downside. And then the third market condition would be the consolidation, or also called ranging market, right? This means that the market is indecisive and we don't see a clear uptrend. We also don't see a clear downtrend. The price is basically just bouncing in between two zones, not giving a clear direction. So a little tip, when you're taking trades, you want to make sure that you always trade with the trend. Now there's a saying that goes, the trend is your friend, and this saying is not without reason. The probabilities when it comes to trading will always be with the trend itself. So when we are in a bullish market and you clearly see that there is bullish market structure, you should mainly only be looking for buys. The same vice versa. If we see that the market is bearish and we are in a downtrend, we should mainly only be looking for sells. And now when it comes to consolidating market, and generally I wouldn't recommend trading during a consolidation or ranging market. Obviously, you could also take advantage of some type of moves from a zone to zone. This ultimately just depends on the size of the zone where it is consolidating. Now, if it's on the lower time frames, I would definitely recommend to just stay away and wait for a new trend to be formed, either to the upside or to the downside, to continue your trading. Okay, so now we continue with the trending markets. We start on how to identify a bullish trend or a upside trend. So first of all, the price moves from the bottom left of the screen to the top right. Then also price is making higher highs, HH, and higher lows, HL. And this means that we have more buying opportunities than selling opportunities. Like I mentioned before, in a bullish trend, you should mainly only be looking to take buys instead of sells, because the probability will be higher if you take trades with the trend. And here's a quick image on how this bullish trend is going to look. We have, as you guys can see here, a higher high, a higher low, and a higher high. Now this higher high is called higher high because this high right here is higher than this high previously here. And now the same with higher low. This low right here is higher than this low right here. So every time a new higher low is formed, a new higher high is created with it as well. Now, because they basically just work in pairs, so you could only have a higher high if you have a new higher low. If you don't have a higher high, you can't have a higher low. And if you don't have a higher low, you can't have a higher high, basically. So that's why they always work together. Now we'll continue with the bearish trend. On how to identify a bearish trend is basically the same with the bullish, but just vice versa. So price moves from the top left of the screen to the bottom right. Now this means that we start on top and we're slowly going to the downside on the screen. Now when you see that the chart is moving like that, then it is a bearish trend. Then also price is making lower lows, LL, and lower highs, LH. And obviously here in this market condition, we have more selling opportunities than buying opportunities. And ultimately, this is how a bearish trend would look. As you guys can see here, we have a lower low, lower high, lower low, lower high, and etc to the downside. And just like on the bullish trend, we can apply the same principles. This low is lower than this low here, so this means that this is a new lower low. And now this high is lower than this high here, creating a new lower high right here. And here the same thing. Lower low can only work with a new lower high formed, and a lower high can only work with a new lower low formed. And now let's talk about the third market condition, which would be the consolidating market or the ranging market. So here basically we will see that price moves from the left side of the screen to the right side. We don't have a movement to the upside. We don't have a movement to the downside. It's basically just ranging from the left side of the screen all the way to the right side. Now in this market condition, price is making equal highs and equal lows, and trading is not recommended during this market condition. Like I mentioned before, you can take advantage of a ranging market, but the probabilities will mainly not be in your favor because you won't have a clear direction either to the upside to the downside. So in general, I just wouldn't recommend trading during this market condition. And now here's a quick image on how this is going to look. Now, as you guys can see here, we have a high here, we have a equal high right here because it is at the same height, and here we have a low here, and here we have an equal low because it's on the same level here as well. So price is basically just bouncing in between two zones. Now obviously when we have a bearish trend, we have bullish trend, we have consolidating markets, there will be times where we have a trend change, because we can change from a bearish trend to a bullish trend and vice versa as well. So how to identify that is with the break of structure. So a change in the market is considered a break of structure, or BOS. This is when the previous trend has been broken and you can see a potential reversal or a change in trend. And here's a quick example on a bullish break of structure when a bearish trend breaks. So here we see a good example of a bearish trend. As you guys can see all throughout here, we were in a bearish trend, creating lower lows, creating lower highs all of the time. And now here we had our last lower low formed, and then you guys can see here this was our last lower high point, which got broken by this new higher high. And now, as I mentioned before, a higher high can only be formed if there's a new higher low created as well, which ultimately we would have here, and then ultimately continuation to the upside. So after this lower high got broken and a new higher high got created, this is where we see the break of structure and the formation of a new trend. And now we see a bearish break of structure when the bullish trend breaks. It is basically the same, just vice versa. So here we come from a bullish trend creating higher highs and higher lows all of the time. Then we see a new lower low being formed, breaking this last higher low point right here. So in the moment where we have that break of structure and we see price breaking under, in this scenario we should wait for a new lower high to be formed like it did here, because lower low comes together with a lower high and then the continuation to the downside. So that's basically how a break of structure from a bullish trend to a bearish trend could look like. Now here's an example of a bullish range break of structure. So basically when the market is consolidating and we get a break of structure to the upside and the trend continues in a bullish trend, this is how this is going to look. So basically here we have this box, which is the consolidation box. So we just see price creating equal highs, we see price creating equal lows, and then we have a break of structure to the upside. So in the moment where the equal highs get broken, a new higher high is going to be formed, and then we gotta wait for a new higher low to be formed to then see the continuation all the way to the upside. So this is basically a break of structure of a bullish range. And now here we have the same example but to the downside. So this is a bearish range break of structure. So basically same thing, we are in a ranging market condition. We don't have clear direction because the market is indecisive in this area, or it is collecting orders. And then we see a breakout to the downside, price creating a new lower low, a new lower high, and then the continuation all the way to the downside. Now, in order to officially confirm a new trend that is going to be formed, there's something called the 3-leg extension, and it looks something like this. So basically here we have the same example like we did before. We have a lower low, lower high, lower low, lower high, lower low. We have a new higher high created over here. We have a new higher low, and then we have the continuation. And as you guys can see here, we have the first leg, which is the leg that is going to break the overall structure before. So we have the first leg breaking this high here, creating a new higher high over here. Then we have a form of a pullback. So this is usually when the market is just going to breathe and collect more orders to then continue another impulse to the upside, breaking the previous higher high, creating a new higher high up here. So in the moment where we have leg 1, leg 2, and leg 3, this is a officially confirmed change in trend. So after seeing this in the market, you can now be more confident that the trend now is going to continue bullish and that there's a higher probability of taking buys than it was on this side here. And now here we basically have the same example, just that we're coming from a bullish trend, creating higher highs and higher lows, as you guys can see here. And then with this first leg impulse, we had the break of structure. So we broke the last higher low, created a new lower low, then we have price creating a lower high, and then we have the continuation. So here again we have leg number 1 breaking structure, we have leg number 2 creating a form of a pullback, and then we have leg number 3 continuing the overall bearish structure. So when we see this change in structure here, we can now be more confident on taking sells to the downside. So that's it with the general information about the market conditions and the trends. And now in the next video, we will be hopping on the live charts so you guys can see some real life examples on how these trends work.